The history of bank accounts in the United States reflects both progress and persistent gender disparities, offering insights into women's changing roles and their ongoing struggle for financial autonomy. In the early colonial period, women's financial agency was limited by the legal doctrine of coverture, which essentially merged a woman's legal identity with that of her husband upon marriage. This meant that any property or income a woman acquired became the possession of her husband. Bank accounts, if they existed, were likely held under the husband's name, reinforcing the idea of women's financial dependence. The emergence of savings banks in the 19th century provided a small but significant step toward women's financial empowerment. These institutions allowed women, particularly those from working-class backgrounds, to open accounts and save money independently. Savings banks offered a glimpse of economic autonomy, even as societal norms often confined women's roles to the domestic sphere. The suffrage movement of the late 19th and early 20th centuries was a pivotal moment for women's rights, including their access to financial resources. Women's fight for the right to vote was intertwined with their broader struggle for economic enfranchisement. The ability to open bank accounts in their own names became intertwined with the demand for legal recognition and representation. The establishment of the Federal Deposit Insurance Corporation, FDIC, in the 1930s had profound implications for women's financial security. By insuring bank deposits, the FDIC provided a safety net that protected the savings of countless women. This development played a vital role in addressing economic vulnerability, particularly during times of economic crisis, and contributed to women's growing sense of financial agency. The digital era ushered in a new phase of banking accessibility, with online banking and mobile apps offering convenience to all customers, regardless of gender. This shift leveled the playing field and reduced some of the historical barriers that may have disproportionately affected women, such as limited access to physical banking locations. It's crucial to recognize that women's experiences with bank accounts are not uniform. Intersectionality, the interplay of gender with factors like race, class, and ethnicity, shapes women's access to financial resources. Women of color, for instance, have historically faced compounded challenges due to systemic inequalities. The feminist lens underscores the need for ongoing efforts to address these disparities and ensure that all women have equal opportunities to participate fully in the financial realm.